The definition of strategic management accounting is based on the creation of value. But what is value? And who is this value being created for? Management accountants have a broad set of tools and techniques that we use to support management. However, to understand how they all link together, it helps to have a clear picture of why these tools are used and what their overall purpose is for. Organisations have stakeholders, the owners, the customers, the employees, the managers, the suppliers, and the broader community. The organisation creates value for each of these stakeholders in a different way. The owners will be hoping to get a high return on their investment. The employees will be looking for a stable work environment with interesting work and a good salary. Suppliers will want to be paid a fair price and also paid on time. And the broader community will be hoping the organisation does no harm and hopefully provides a positive contribution towards society. However, it's usually very difficult to provide all the stakeholders with what they want because they have competing desires and resources are limited. One way to help picture value is to consider the trade-offs that managers have to make every day. Employees will often want higher salaries, but this may lead to lower profits, which is in conflict with what the owners want. Suppliers may want to be paid a higher price for their goods and services, but this may lead to higher prices charged to customers who definitely aren't impressed with this approach. As managers navigate their way through this process of balancing all the competing stakeholder needs, they will need information to help them make decisions, both for day-to-day activities and for long-term strategic plans and projects. For example, customers often want to have a lower price product. However, this may require the use of outsourced labour from offshore locations that have lower safety standards and poor working conditions. In this situation, a company may appear to be forced to choose between giving value to the customer at the expense of the supplier or employees, or failing to create customer value and losing sales, potentially even going out of business. To recap, strategic management accounting is about creating sustainable value. It does this by supporting the strategy process with analytical tools and by providing useful information for managers so they can make effective decisions. Trade-offs are an important part of creating sustainable value so that a balanced outcome occurs for all stakeholders.